If you have even $100 sitting in your bank account right now, doing absolutely nothing, this video is going to show you exactly how to turn it into a real wealth-building machine. And the best part? You don't need to be a Wall Street expert. You don't need to spend hours researching stocks. And you definitely don't need a financial advisor charging you thousands in fees. Stay with me for the next 10 minutes, because by the end, you'll know exactly how to make your first investment today. Welcome to Wealth Index, where we break down complex investing into simple steps that anyone can follow. Today we're covering ETFs, what they are, why they're one of the most powerful investing tools ever created, and exactly how to buy your very first one, step by step. Let's get into it. So, what exactly is an ETF? ETF stands for Exchange Traded Fund, and the easiest way to understand it is to think of it like a basket. Instead of buying one single stock, like Apple or Tesla, you're buying a basket that holds hundreds of different stocks all at once. Here's a real example. The most popular ETF in the world right now is called VOO. It tracks something called the S&P 500, which is just the 500 biggest companies in America. So when you buy one single share of VOO, you're instantly invested in Apple, Microsoft, Amazon, Google, Nvidia, all 500 of them, in one click. This is powerful for two big reasons. Number one, diversification. You're not betting everything on one company. If Apple has a bad quarter, you still have 499 other companies holding you up. Number two, simplicity. You don't need to research 500 individual stocks. You buy one ETF, and it does all the work for you. Here's something that surprises most people when they first hear it. Studies consistently show that over a 20-year period, roughly 90% of professional fund managers, people who do this full-time, fail to beat a simple S&P 500 index fund. Think about that. 9 out of 10 Wall Street pros can't beat an ETF that you could buy in under 5 minutes from your phone. And the fees are incredibly low. A typical ETF like VOO has what's called an expense ratio of just 0.03% per year. That's basically free. Compare that to actively managed mutual funds, which often charge 1% to 2% annually. That might sound small, but over 30 years, that fee difference alone could cost you hundreds of thousands of dollars in lost growth. ETFs are also flexible. Unlike mutual funds, you can buy and sell ETFs anytime during market hours, just like a regular stock. No lockup periods, no minimums in most cases. All right, let's talk about the actual ETFs worth knowing as a complete beginner. I'm going to keep this to 3 because simple beats complicated every single time. Number 1. VOO by Vanguard. This tracks the S&P 500. It's the gold standard. Warren Buffett himself has said this is what most people should invest in. Low fee, massive diversification, 30-year track record of growth. Number 2. VTI, also by Vanguard. This one covers the entire US stock market. Over 4,000 companies. Even broader than VOO. Great choice if you want maximum diversification across all company sizes. Number 3. QQQ by Invesco. This tracks the top 100 companies on the NASDAQ, heavily weighted toward tech. Apple, Microsoft, Nvidia, Meta. Higher growth potential, but also slightly more volatility. For most beginners watching this right now, start with VOO or VTI. They're simple, proven, and historically deliver around 10% average annual returns over the long run. Once you're comfortable, you can explore QQQ or sector-specific ETFs. But for your first investment, keep it simple. Okay, here's the step-by-step process to buy your very first ETF. I'm going to make this as simple as possible. Step 1. Open a brokerage account. I recommend Webull or M1 Finance for beginners. Both are completely free, commission-free trading, and beginner-friendly. Links are in the description below. Step 2. Fund your account. Transfer money from your bank. You can start with as little as $100. Most brokerages take 1 to 3 business days to process the transfer. Step 3. Search for your ETF. Once your account is funded, go to the search bar and type in the ticker symbol. For VOO, just type VOO. For VTI, type VTI. Step 4. Place your order. Select Market Order. That means you're buying at the current market price. Enter the dollar amount you want to invest. Hit Buy. That's it. You're now an investor. Step 5, and this is the most important one, set up automatic investing. Every single week or month, automatically invest a fixed amount. Even $50 or $100 makes a massive difference over time. Here's why. If you invest $200 a month into VOO starting today, and it returns an average of 10% per year, in 30 years, you'd have over $450,000 from just $200 a month. That's the power of compound interest and consistency, and that is how simple ETF investing really is. No complicated strategies, no stock picking, no expensive advisors. Just pick a solid ETF like VOO or VTI. Invest consistently every single month and let time do the heavy lifting. If this video helped you, hit that like button. It genuinely helps this channel reach more people who need this information. Subscribe to Wealth Index for a new investing video every week.